Hey folks, I hope you're all doing well. And in today's video, I will quickly go over the ICT premium discount Fibonacci zones, okay? Since I see a lot of new traders that are confused when people mention the discount, the premium, the equilibrium, the discount raise, the premium raise, all this stuff. And I also see a lot of ICT traders not even include the premium discount zones in their daily routine, right? They don't use it when trading, which can cause a lot of unexpected losses when you don't take any of these zones into consideration. So I feel like every ICT trader should know what the discount and premium is. And if you've watched any of his content, he also talks a lot about the premium and discount zones. So these premium and discount zones are used to identify optimal entry levels and exit points, basically. So the Fibonacci extension has two zones. Well, it has three, but two primary zones. We have the 50% zone, which will be this zone located right here. And then we have the everything above the 50% and everything below the 50%. Okay? And everything above the 50% should be considered premium, and everything below should be considered discount. Okay? And what you do is you draw the Fibonacci from the swing high to the swing low, or just from the lowest point of the range that you're trading to the highest point of the range that you're trading. So if we take this range right here as an example, let's say I wanted to place a trade up here, right? This is the range that I'm trading. Maybe I wanted to take this inverse fair value gap right here, right? This is the range that I'm trading. So I'm going to draw my fib from down here to all the way up here, because this is the lowest point of the range and this is the highest point of the range, right? So it's important to draw it correctly. Otherwise, it is not going to be, it's not going to be correct. So ideally, you only want to be selling inside of premium, which means that everything that happens up here, everything that happens above the 50% is where you want to be selling. Okay, you don't want to be buying in a premium. And everything that happens below the 50%, that is where you would look for longs, right? This is where you want to buy. Okay, and that is because below the 50% level, there's a higher probability of price going up. And in the 50%, above the 50%, there's a higher probability of price going down. Okay. So generally speaking, you always want to be looking for shorts above the 50%. And you always want to be looking for longs below the 50%. But the 50% zone itself, this line right here, should be considered a target. Okay. It's an optimal area to place your take profit. Okay. Oftentimes, what you will see is that price consolidates around this area of the range. Okay. It either consolidates or reverses. Of course, it can just go straight through, but it should be considered a target for your trades. So let's say I shorted something up here. My target would be a PD array inside of this 50% level, right? I could either, maybe I wanted to target this order block right here, or maybe I wanted to target this fair value gap down here, because that is very near the 50% level. And this has a high probability of sending price in the unintended direction again. So the 50% level should be used as targets. Okay, ICT always recommends to use the equilibrium. The 50% level is also referred to as equilibrium, in case you were confused about that. That is what it is. The 50% level of the premium discount Fibonacci tool is called equilibrium. Okay, and ICT always suggests using that as your profit target, because price likes to consolidate around this area or reverse. So as you can see right here, you see what I'm talking about when I'm saying consolidate around this area. Every time price hit this area of equilibrium, it kind of use it as support, right? So that's why it's an optimal place to place your entry. So let's say I use this inversion fair value gap, right? Delete this. Let's say I use this inversion fair value gap. I would target this, the 50% level, right? The same goes for, let's say something happened down here. Let's say we came down, right? Let me draw it out. Say we came down, boom, straight through. Maybe we did this, hit a fair value gap, right? Let's say I entered long right there of a fair value gap right here, right? Then the 50% would be my target, right? And if there's in this case, we have a small fair value gap right before equilibrium. So that would be my target, right? Because it's close to equilibrium, I would place my profit target right there. So that is basically the ICT premium discount, right? As you can see, price likes to consolidate around the 50% level, which is also called equilibrium. And you always want to be looking for selling opportunities when we are above the 50%. And you always want to look for long opportunities when we are below the 50%, okay? But in some cases, you can use the 50% as a level of support, kind of, right? We have this. So let's say price comes down. We get a liquidity sweep right there, right? And we hit the 50%. Then we inverse this fair value gap, right? So then I could, if I wanted to, go long here and target this high, even though we are in premium, right? So that all comes down to screen time and experience. But generally speaking, you always want to look for selling opportunities above and buying opportunities below the 50%, right? And there's another great example right here. As you can see, we hit the equilibrium, went up, hit it again, went up, down again, went up, right? So what would I do in this case? I would target this fair value gap as my target, as my profit target, right? Maybe I shorted something up here. Maybe I shorted this fair value gap right here, right? So that would be my entry right here. And then my profit target would either be the 50% or the PD array that sits right below the 50%, right? And it is very, very simple. You just draw it from the lowest point of the range to the highest point, right? Now this is not the range. This is, this is. So that is basically what the ICT premium discount is. But there is something else that I want to mention about this tool that you could use. So you can also use it inside of fair value gaps. So there is a fair value gap right here, right? Then what you could do is take the same Fibonacci from the low of the fair value gap to the high of the fair value gap, and then find the 50% level of the fair value gap, right? And the 50% level of a fair value gap is also a point of reversal, somewhere price has a high probability of reversing off of. So let's say I wanted to enter off of this fair value gap for some reason, but I think that, okay, this fair value gap is way too big. So my risk to reward would be bad, or my stop loss would be too far away. I could use the 50% of the fair value gap as my entry point. Because oftentimes you will see price come down to the fair value gap and then hit this 50% level and then go up, right? So that is also a way you could use it. You can also use it on order blocks, right? So let's say right here, you would draw it from here to right there. And this would be the mean threshold of an order block, right? So that is also just like on the fair value gap, an area where price can reverse off of, just like it can reverse off of, look at this, for example, we have this fair value gap here. Just like price can reverse off of the beginning, off the bottom, after you fill, it can also reverse off of the 50% level of the fair value gap. And oftentimes you will see that actually a lot of the time on these fair value gaps, price does in fact go to the 50% level of it and then goes up. So I would say 85% of the time on fair value gaps, you could place your entry halfway through the fair value gap, right? You might miss a few entries, but it is better risk to reward. So that is completely up to you. But I just want you to know that the 50% level of most PD arrays are also considered valid points of reversal. So that is also a way you could use the Fibonacci extension. And sorry, I have not actually shown you these settings for it. So there it is. Very, very simple, right? So again, all it is, right? Let me put it up here. And then we could maybe do it like this. This is called premium. And this is called discount, right? And then this right here is called equilibrium. There we go, right? And right here we could do look for shorts, right? Down here we could do look for buys or longs, right? And then right here we could do use as a profit target. Take a picture of this if you want to, write it down in your notes. This is basically what the ICT premium discount zones mean. Okay, so if maybe you are looking at some sort of fair value gap or PD array that you want to enter off of, and then you could draw this Fibonacci tool out, and then let's say you wanted to go short, right? And then you notice, oh, we're also up in high premium. That, validates the setup even more, right? Because if we are high up in the premium, placing a short is not a bad idea, right? Right. Let's say I was trading this range right here. And maybe I thought to myself, okay, I want to short this. Yeah, that may not be a good idea, right? As you can see, we violated it completely. And that is because it is not a good idea to short in discount, right? And the same goes for this. Maybe I wanted to long something up here, right? Maybe I wanted to long a fair value gap up here. Let's see, there's nothing on the 4-minute. See if we can find anything on the lower time frames. Okay, so in this case, there was actually no long entry anywhere. Yeah, there was one right here, right? So maybe you were looking at this fair value gap and you were thinking, oh, should I long this fair value gap? And then you draw out your Fibonacci, and then you see, okay, this is very, very far up in the premium. I probably should not be long in this, right? And what do? We inversed it and used it as a bearish PD array instead, right? Because we were so far up in the premium. So that is basically it for the ICT premium discount. It's very simple, yet a lot of people seem to forget it or don't use it, even though it is very, very useful. So I suggest that you use this every time you put on a trade and try to look for the shorts in premium and longs in discount. Use the equilibrium as profit targets, and that is it. So I hope you enjoyed, and I hope you understood. And until I see you next time, stay blessed and bye-bye.